Mitt Romney wins the Florida primary with almost 50% of the vote. Facebook preps to go public, and Amazon disappoints as the first trading day in February tries to kick off with a bang. I'm Alex Steele, and the Morning Call starts right now.
Good morning. I'm Scott Rudd, the Chief Strategic Officer of T3Live.com.
And I'm Alex Steele with The Street, and together we bring you Morning Call Express. Happy Wednesday, everybody. So we have U.S. stocks getting their best start in 15 years. But yesterday's action opened higher, but then we faded. How does that bode for heading into a month that we typically see negative returns?
Well, yesterday we started strong, and then you had two poor economic numbers. You had the PMI came out less than expected. Consumer confidence, which is a lagging indicator, was also less than expected. So that put a little bit of cold water on yesterday's rally. But we also talked yesterday about how after a month, you have new monthly flows. Last night, I think we had some decent numbers out of China. And then you also had, Mitt Romney, now the GOP candidate, which I think the market likes. And then you also have Europe muddling along. So combine that, and we're starting February on a good foot.
Now, it's interesting because China's data seemed very mixed. You had HSBC saying that PMI came in at 48.8, but China official data said it was over 50. So I wonder how the market's going to digest that today. And in the meantime, is it going to be a very stock-specific market?
Well, the correlation of one, I feel, is broken, and that's great news for traders because what we like to do is find relative strength. We like to have a slow, methodical market so we could pick winners, we could stay with them, because when they're going crazy up and down, it's hard to grab any size or even use a tier system. So the bears had every opportunity yesterday to break the back of the momentum bulls. We've talked about this floor. We've talked about that 1303 to 1308. Here we go. Hasn't been able to break. You look at the SPX. Here's what I'm talking about. Here is that gradual uptrend, and then you had the accelerated uptrend, and the bears had every opportunity to break it here. They tried on Monday, broke below, came back above. Yesterday we opened up and continued to build a floor. Now we seem like we're going to be going to the upside. So you have 1321, then you have the highs here of January of 1333. If we can close above that high, you're going to see a move to last year's high, which comes into play, right around this 1346 to 1355. Actually, that's not last year's high; it's 1370, but it's the next point of reference.
And very quickly, before we get some individual names, are you going to be adding to your long positions then if we see good momentum today?
I'm going to see what shows relative strength. I'm still seeing strong stocks. I'm trying to stay with my macro longs. I've been a little shaken up with some of my momentum longs, but I'm still net long. So an up opening like this is good. I think with a bit more clarity, we'll all get more confidence to add to some winning positions.
Now, talking about Amazon reporting after the bell yesterday, disappointing quarter. Stock was obviously down, but it was also up over 12% in January. And there were certain bright spots in the quarter as well. I mean, revenue was up big compared to last year.
I just think the valuation is so lofty, and that's why I avoided it for an option play. Too heavy in premiums. They had too much to prove. But if you look here, here's the support to trade against for Amazon today. You look at the chart here, came all the way down from 240 to as low. We had a nice little trade around 180, but then we don't take stock into earnings. So right now it's around 177. So I would watch this point of reference. This right here is about 173, and then the low here comes a little bit below 170. So really like 170 to 173. If you could hold that area, maybe it's worth the trade. And if you have a long-term thesis on Amazon and you're not caught in this mess from 250 down to that area, you know what? You could try some, but I don't think you have to see something first.
And with the headlines coming out about a possible Facebook filing for an IPO today, are you going to be looking at the LinkedIns and the Groupons of the world to trade against that news?
Yeah, LinkedIn's been acting better. I think LinkedIn can go higher above 77. If you look quickly at Groupon, you will see that it has a nice chart, nice descending trend line that's been in place since the opening. So I think above about 20, 50, 21, it can go to 24, 25. And just to recap real quickly on Amazon, one of the bright spots was cloud.
Right, which we are going to get to in the entire Morning Call.
Yes, and we're going to go over VMW. That looks good. It's flagging, can continue higher. CRM is playing a little bit of catch-up, and even FFIV that already reported is a little sloppy, but it could also continue higher.
And very quickly, in like 10 seconds here, banks holding up really well. Is there more juice for them, like the Goldman that you were trading?
Yeah, Goldman and Morgan both showed relative strength yesterday. I think Goldman can get to about 116, 117. I think Morgan above 1890 can get above 20 pretty soon.
All right, good stuff. So we're going to talk more about banks as well as cloud computing stocks and Super Bowl stocks, actually, which should be really fun. So join us for the entire Morning Call on the Street.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.